Discover the potential of the trio through strategic and financial strength in the tech sector. All three companies strategically lead the semiconductor industry, leveraging operational efficiencies and strategic investments. NXP Semiconductors. The firm is maintaining an operational edge and sharp cost and debt management, projecting revenue stability. United Microelectronics. The company decreased OPEX and solid cash reserves, positioning for progressive CAPEX. KLA. The corporation attained solid earnings per share performance and expanded its market lead with a focus on advanced packaging. Let's dive in. Here are the three semiconductor stocks to boost your wealth exponentially. Welcome to Timely Investment Research. Finding prospects in the semiconductor business are still abundant, especially for companies with sound financial standing, efficient operations, and strategic vision. These three semiconductor stocks have the potential to yield significant profits. Every business highlights distinct advantages and approaches that support its potential for expansion. The first one does a great job of keeping costs under control and operations running smoothly. By cutting its overall debt by about $1 billion, the company showed responsible debt management, improved flexibility, and lowered interest costs. According to the company's forward-looking outlook, the company's top and bottom lines will continue to improve. Moreover, the second one has progressively decreased operating expenses using strategic cost management. Meanwhile, it is keeping a solid cash reserve. Sufficient liquidity is essential for financing current and upcoming capital projects without taking on undue debt. Finally, the third one has demonstrated remarkable earnings per share performance with non-generally accepted accounting principles earnings per share. The company's innovative packaging business and emphasis on customer-centric solutions have helped it maintain a strong market position, even in the face of a strategic shift that resulted in increased inventory charges. Number 1. NXP Semiconductors. Non-generally accepted accounting principles operating expenses for NXP Semiconductors was $736 million in first quarter 2024, or 23.5% of sales. This represented a $19 million reduction from the midpoint of the projection due to lower variable compensation and aggressive cost management. In first quarter 2024, NXP Semiconductors lowered its net debt to $6.9 billion by cutting its total debt by $997 million. Lowering interest costs and improving financial flexibility are responsible debt management measures that raise total profitability. Moreover, the business projects sales of $3.125 billion for the second half of 2024. This indicates stability and lays the groundwork for possible growth in the latter part of the year. Because of favorable improvements in useful life estimates for production equipment and operational savings, NXP Semiconductors projects its non-generally accepted accounting principles gross margin to reach about 58.5% in second quarter 2024. By the end of second quarter 2024, the distribution inventory may expand to 1.7 months. Thus, this will support the company's preparedness for expected growth while allowing for adjustments depending on demand patterns. Finally, in first quarter 2024, NXP Semiconductors maintained distribution inventory at 1.6 months, which was well below the long-term target of 2.5 months. Number 2. United Microelectronics. Operating costs for United Microelectronics in first quarter 2024 were 5.7 billion new Taiwan dollars, a 13.4% drop due to seasonal tendencies. This large drop in operating costs during a normally slow season demonstrates United Microelectronics' efficient cost control techniques. Moreover, 513 million new Taiwan dollars was received in other operational revenue, mostly from government subsidies. Despite being lower than before, this fits the depreciation curve, suggesting that asset depreciation uses subsidies effectively. Additionally, in first quarter, United Microelectronics had 119 billion new Taiwan dollars in cash reserves and 378 billion new Taiwan dollars in total equity. These numbers demonstrate a robust cash position. This is essential for financing current and upcoming capital projects without taking on unwarranted debt. With a current value of 254 billion new Taiwan dollars, property, plant, and equipment account for much of the equity growth. Hence, this large investment represents an extension of its technological infrastructure and industrial capabilities. Finally, in first quarter, there was a significant change in the average selling price that counteracted the 4 to 5% rise in wafer shipments. Therefore, this change reflects United Microelectronics' strategic pricing approach to balance revenue stability and shipping volume growth. Number 3. KLA. For third quarter fiscal of 2024, KLA reported generally accepted accounting principles diluted earnings per share of $4.43 and non-generally accepted accounting principles diluted earnings per share of $5.26, nearing the high end of their respective adjusted guidance ranges. These numbers indicate profitable and efficient cost control. The non-generally accepted accounting principles earnings per share would have been $5.66 minus a $62 million charge for excess and outdated inventory connected to the company's withdrawal from the flat panel display sector, which had a 40 cents impact on earnings per share. This modification highlights KLA's capacity to sustain solid profitability. Additionally, generally accepted accounting principles diluted earnings per share projection for the fourth quarter is $5.66 plus minus 60 cents, while non-generally accepted accounting principles diluted earnings per share is expected to be $6.07 plus minus 60 cents. This predicted rise in earnings per share demonstrates how KLA's profitability and efficiency have been steadily increasing. Finally, due to its broad portfolio that addresses various technical issues and its steady market leadership in process control, KLA has a favorable position in the semiconductor equipment business. KLA has a significant market presence even after its market share decreased by about 1% in 2023. This is primarily a result of export restrictions imposed by the U.S. government that limited its access to 10% of the Chinese market. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.